When you borrow money, there are some things you need to know in order to make sure you're not digging yourself into a hole. Troy Sutton has that advice in this week's KTAB Financial Friday.
I've always heard that if you have to borrow money from a pessimist because they never expect to get paid back. I've also heard if you lend money to an in-law and you never see that in-law again, that was probably a good investment. All of us need cash sometimes. There might be a period of time when our expenses are larger than our income. This could happen through poor budgeting, job loss, death, etc. And sometimes it's our fault, and other times it's not. But the question is the same either way. Should I take a personal loan? There's the story of an old man on his deathbed. Martha, yes, dear, do you remember the day we got married and I dropped your diamond ring into the wet cement, never to be recovered? You were there. Yes, dear, I was there. Don't worry about that. Martha, do you remember the day I was downsized from my third job? We lost the house, we lost the car, and we didn't qualify for unemployment. You were there. Yes, honey, I was there. Shh, it's okay. Martha, do you remember when I spent all of our life savings trying to support our lifestyle? I got sick and now I'm dying. You're here. Yes, dear, I'm here. I'm always here. Do you know what I've realized, Martha? What, dear? I think you're bad luck. Life can get rough. So let's talk about some do's and don'ts of taking personal loans. Don't borrow money from friends or family. Sam Levinson said, never lend money to a friend. It's dangerous. It could damage his memory. Although you may have every intention of paying back the loan, few things can break up a family like money. The future is unwritten, and though you may have problems now, you might have bigger problems in the future, which could prevent you from paying back your friend or your family member. So avoid the problem altogether. Don't borrow from friends or family. Don't use a variable interest rate on personal loans. Most personal loans have fixed interest rates. However, it would behoove us to read the fine print before taking out a personal loan. A variable interest rate could mean higher costs, higher payments, and ultimate default if things don't go your way. Don't pay high origination fees. Oftentimes, more shadowy lenders will charge large origination fees and then wrap that cost right into the loan. To avoid this trap, read the fine print. Hey, there it is again. Or only work with regulated lenders. Don't fall for gimmicks like a new TV or a family vacation to entice you to borrow money from a certain lender. Nothing is free in the end. Somebody is paying for it, and ultimately, it's us, the consumer. Now, let's talk about some do's. Do pay attention to any penalties attached to your loan. For instance, a common penalty is a prepayment penalty. If you borrow money for 36 months at, say, 10% interest and you pay it off in 6 months, is there a penalty for that? Always look at the APR, the annual percentage rate of charge, but we often overlook the total amount repayable. That figure is important because it gives us loads of insight into the extra charges being wrapped up in your loan, so make sure you look at it. Lastly, what are the penalties for late payments? These can cause long-term headaches, so know what they are. Do know your fees. Now, do consider keeping track of your credit score. Most banks and credit unions or credit cards offer this as part of your membership with them. So you can track your score daily if you want to. I have it on my bank. There it is right there. There's my FICO score. The better your FICO score, the more likely you are to get approved by regulated lenders with lower interest rates. Ever notice that the people who spend a lot of money on beer, cigarettes, and lottery tickets are always complaining about being broke and not feeling well? Do consider carefully any co-signers. I can't tell you how many of my well-intentioned clients co-signed on notes for their loved ones that ultimately came back to haunt them. Only use this as a last resort, since you are jeopardizing not just your credit reputation, but also the co-signer's credit reputation. Do avoid payday loans. Let me just say this. Payday loans can and do charge interest rates that can be over 300%. 300%! 100%, 1.21 gigawatts. I know a guy who knows the guy, you know what I'm saying, 300%. That kind of interest looks a lot like loan sharking and has become illegal in several states already, so do avoid that. Do shop around for interest rates. Don't just use your local or personal bank. With today's technology, you've got access to easy shopping that could pay off significantly over the course of your loan. And remember, loans are just a short-term solution. You, my friends, you are the long-term solution. So get your financial affairs in order, eliminate the debt, live within your means, pay yourself first, and save, save, save. Only you can prevent forest fires. No, only you can reliably prepare for your future. Today's mighty oak tree is just yesterday's nut that held its ground. Have a good week.
Thank you, Troy, for that advice. If you would like to contact Sutton Financial Group, they are located at 2449 South Willis in Suite 106. You can call them at 437-0709 or go to suttonfinancialgroup.com.